Hi, everyone. Thanks so much for hopping on. We have a few more people registered, so we are going to wait a few more minutes to get started. Hi, everyone. Good afternoon. This is Margaret Myers with Bridge. Thanks so much for hopping on. It looks like we have a few more people that are dialing on, so we are going to wait a minute or so, and then we'll go ahead and get started. All right, Brian, I think we can go ahead and get started. So thanks again to everyone that's hopped on. We're looking forward to today's webinar, and we appreciate your time this afternoon. So I'm joined by Brian Hill with RIA Compliance Consultants, and we're going to be running through some billing best practices with you all this afternoon. So Brian will be covering the compliance side, and then I'm going to go through the Bridge technology side of things. So my name is Margaret Myers. I'm the VP of Sales at Bridge Financial Technology. I've been with Bridge for about 3 years now and run the sales and marketing side of the team. And I'm joined by Brian Hill. Brian, do you want to give a quick introduction?
Sure. Thanks, Margaret, for having me participate in today's webinar. I'm president of RIA Compliance Consultants. We work with investment advisors of all different ilks and stripes, and we've worked with approximately 1,600 investment advisors in the last 16 years. So we have lots of experience. I'm in my 26th year of working with investment advisors. I've been in-house. I've been in private practice. I've helped defend and represented investors and defended investment advisors. So I've worn quite a few different hats. But throughout that whole time period, I've worked on investment advisor compliance. So hopefully today we can share some of our experiences with you.
Great, thanks, Brian. So the agenda for today, we're going to start by just going through a quick intro of both of our firms, cover the goal for today's webinar, and then I'm going to turn over to Brian. He's going to take us through an overview of some billing compliance items just to keep in mind, especially as we're heading into another quarter end in a couple of weeks. Then I'm going to go through a live billing demo of Bridge, and then at the end, we're going to wrap up with a Q&A session. You should see at the bottom of your Zoom that there is a Q&A box. So feel free to submit questions throughout the webinar, and then we'll go through all of those at the end. We'll also be sending out a link to this slide deck, a billing checklist, and we have the webinar being recorded if you want to rewatch that later on as well. So just a quick summary of Bridge Financial Technology and what we do. We are a Chicago-based software company, and we specialize in data management and portfolio accounting. So connecting with custodians such as Schwab, TD Ameritrade, Fidelity, Pershing, getting that data, reconciling it each day in our system, and then using that to help advisors with performance reporting and then billing. So during today's demo, we'll focus on the billing side, but we do have client reporting and performance tracking available as well.
Well, this is Brian again, and I'll tell you a little bit about RA Compliance Consultants. We basically are, from beginning to end, compliance shop for investment advisors. We help with setting up investment advisors through the registration process, helping them build and refine their compliance program, preparing their compliance disclosures, their compliance manuals, providing training materials, providing training to the personnel at investment advisor firms, and then helping the investment advisor CCO do testing and reviews of the effectiveness of their compliance program, and then of course helping our investment advisor clients with SEC examinations. So we've been around for, as I said before, 16, we're going on our 16th year here. Actually, our anniversary was 2 months ago, so we're 16 years and 2 months. We're passionate about helping investment advisors build robust, effective compliance programs so that they can do the right thing for their clients. And so if anybody does need help, we're certainly here to help you. And we have a very robust website. I encourage everyone to take a look at it. It's ria-compliance-consultants.com.
So the objective for today's webinar, as you've probably heard so far, Brian has a lot of expertise and experience in on the compliance side, but specifically on the billing side of things as well. So they are one of our partners, and we thought it would be especially helpful now, again, as we're coming up on a quarter end, just to focus on some of those hot topics on the billing compliance side, and then again, show you how you can leverage technology such as Bridge to help automate some of the billing and maintain that compliance as well. So with that, I'll turn it over to Brian. We'll start getting into some of the compliance content.
Well, I think this is a great marriage between fee billing software and compliance consulting. What we're seeing right now, one of the top issues that the SEC is focusing on is fee billing or fees and expenses that are being incurred by the retail investor. If you listen to Chairman Clayton, almost every time he talks about investment advisor priorities, that topic comes up. And we have seen that for sure in our actual clients' examinations. The SEC is going deeper, doing a much deeper dive. I would say the old SEC before Chairman Clayton probably dealt with more issues. And under Chairman Clayton, the SEC is dealing with less issues, but they're going way deeper and really trying to find if there are problems there. And their focus seems to be not on the large institutional players or the publicly traded companies. It's on the retail, protecting the retail investor. So this level of scrutiny is very high, and fees and expenses is easily the #1 issue that I'm seeing in SEC exams right now. And the SEC, you know, they're not hiding this issue. They issued back in April of 2018, OC, the Office of Compliance Inspections and Examinations, laid out the issues that they were seeing, that they're looking at, and those really have not changed. And so we're going to go through with some of these sort of risk factors or issues that the SEC saw and, you know, thought were problematic. Of course, the first one let's talk about is valuation of the assets. And for instance, here, one of the problems that we see is sometimes in these assets where there's not a fair market value available, that investment advisors are using the original purchase price and then they're charging some type of asset-based pricing. So that's sort of problem. Obviously, that's problematic if you have an asset-based pricing and you're not using fair market value. You either need to, you know, find a way to get a fair market value on it, and you have to be very careful because you need it to be an objective, you know, third-party sourced valuation for that fair market value, or you need to consider, you know, a different type of fee, like a fixed fee. Also, one of the problems that they saw in valuation was that a lot of investment advisors were not matching up their valuation and their agreement in ADV 2A with their actual practice. So like they might say in their agreement, we're going to use the last business day, and instead they're using the average daily balance, let's say. And so what the SEC does in that situation is they go and run the numbers when they see this type of discrepancy, and they figure out if your client did worse or paid more because of the discrepancy. And if the client had to pay more because of the discrepancy, the SEC is saying, hey, you need to do a refund. And you basically do a refund because you're hoping you're not going to get written up. It's probably going to be a deficiency in your exam, but you're hoping that they don't make a referral into enforcement. That's the name of the game in these exams. So clearly, you got to make sure the valuation matches up with what in the agreement, matches up with the valuation in actual practice. As a matter of fact, you need to really check valuation in agreement, valuation in ADV 2A, and valuation in actual practice. All three of those have to match. If they don't match, the SEC is going to take any discrepancy, and if it hurts the client, so to speak, the client paid more, they're going to make you a refund. Another issue is like to the extent that you're using certain assets that were supposed to be excluded from management or from the fee billing. They're looking really closely at that. Great examples of that would be cash equivalents, you know, variable annuities, alternative investments like hedge funds, private equity, art, you know, whatever. Oftentimes those will be excluded, but then there was a failure to check to see if they were excluded and they were actually being billed on. I don't know. I think Margaret has an example here, sort of a screenshot of the tool here that how it can help.
Yep, exactly. So this screenshot's just showing the option to exclude cash in this example at a firm-wide level, or as you mentioned, if you have clients that bring over legacy positions and you want to exclude that from the billing on just that selected account, we have that option as well.
Yeah, and I think like that this is really important to carefully track this because the SEC is going down to this level of detail. They will take you know, a sampling of accounts or relationships, and they're going to look at every single excluded asset to make sure it actually was excluded, or to make sure that the valuation that was agreed upon was actually used. Right, so frequency of billing. This seems like an easy one, but the SEC's found out quite a few. Actually, it's not so easy. I think it's easy in concept, like, yeah, I'm monthly, I'm quarterly, I'm in advance, I'm in arrears type of thing. But I think what happens is as firms have different systems, they have grandfathered systems, they have different reps doing different systems or different frequencies. then basically this becomes a challenge. But the most common that we see, or and the SEC noted, was they did monthly instead of quarterly, as they stated in the agreement, and or they did advance when they said they were going to do arrears. Also, of course, they don't properly prorate, initially or at the end of the engagement. They don't prorate. So if you start in the middle of the billing period, you obviously either have to waive that fee or you have to prorate it based on the number of days that you actually do the work. Likewise, at the end, if you're charging in advance or in arrears, I guess you have to prorate. And if it's in advance, you're going to be refunding them fees. They will look at that. That's a for sure thing to look at no matter what. And I think we have the Bridge software can help you on this front too. Margaret has a screenshot here.
Yep. So on the left-hand corner, it is a little bit blurry, but you can see the billing start date is in the top. So for each account in our system, it's going to feed into our system automatically from the custodian once it's opened and funded, and that will be the billing start date. Brian, we were talking yesterday just about the difference of billing versus when an account is funded versus when it's invested. So you do have the option to change the billing start date in our system if you would rather bill as of when the funds were invested.
Yeah, I think that's a great issue to talk about, which is some investment advisors. Well, I know some investment advisors want to bill the day the agreement's executed. I personally think that might be a little premature. You probably want to have the actual access to the assets. But I think one of the things that you need to be aware of is that if you're sitting on cash, for instance, for a long period of time, more than a few days, you need to be prepared to explain why you didn't go ahead and get them invested right away. And maybe it's that you're timing the market. Maybe there's some market considerations that you're taking into consideration, or a concentrated position that you're trying to sell out of. Lots of different issues, right? So you have to be able to document that. And some investment advisors will want to say, I don't want to start charging until we're actually in the market. So the nice thing is that it sounds like the default here is that they'll start at the day it's funded, but they give you the ability with this with their software to then change it to a different date, manually go in and override and change it. So I think that's a really important issue, and I have seen it come up in SEC exams. So I guess the compliance advice to you is, if you're not going to invest right away, I think two things are required. One, I think you need to have communication with the client explaining why that is, and then you need to document not only that communication, but the strategy that's being pursued, and showing what you did to earn, especially if you're charging a fee, what you did to earn that. And of course, you have the risk of, in these situations where if you don't have this communication, someone says, well, I thought you were going to invest me on day one, and I missed this huge gain and I'll never get it back. And in this volatile environment, that's real. You can cause someone some serious damage. So you really need to be clear about your strategy with your client and yourself. Incorrect fee rate. When I was in-house, I unfortunately had to experience this, and I do see it still to this day. Essentially, in this situation, basically what happens is the SEC is looking for a scenario where the client is being charged a higher rate than what their agreement said. So you have to really make sure and what the ADV said. So I think you really have to go back in your audit in your initial process of setting up that client in the system. I like to have two eyes on it. I like to have, maybe the original processor or the operations person that's setting it up. And then I like to have a second person look at it, look at the underlying documents to make sure that we got it right. And then I want to have somebody else who's not involved in the process take a look at it afterwards. But this is definitely something that happens. If you charge less than what you said, the SEC or the state regulator may say, hey, you have an inaccurate fee schedule, but they generally, they won't let you, you know, it only works one way. You get a refund if it's too much. If it's less, they sort of give you a hard time for not having that, you know, an accurate ADV disclosure, and might tell you to go back and amend that or to amend your agreement, but you don't get sort of to charge them more later on. They're also looking for any type of double billing of clients. And so that's something you have to watch out for also.
So the two screenshots that I have on here just show you from the Bridge system how each individual account gets assigned to its own fee structure. So you can see different accounts can have different fee structures if you need to customize that to, of course, match your agreement. And then the other layer of granularity that we took into account was the billing partition. So if your agreement says that you're billing equal percentage of AUM on a monthly or quarterly basis, then you can choose either of those options, and it will be 1/12 or 1/4 of whatever percent you're billing that client on. Alternatively, if it's based off the number of days in that period that you're billing, you can select daily, and then it will be billed based off of the number of days within that month or quarter.
Okay, so this is another example is the failure to so a lot of people will say, hey, we'll allow you to household accounts, but then they fail to actually put that household, they you know, fail to put that household account that in the lower rate that should have been obtained because there was a fee schedule. So that's pretty not uncommon. And I think it's more administrative where people just aren't paying attention to family householding. But it's definitely something the SEC is going to be looking for. And then the other issue I see along the same lines with fee schedules would be failure to lower the fee when they reach the break point. Like, so you need to sort of be cognizant or look at your accounts to see whether or not they've crossed over the break point if it's not automatic, if it's not done automatically for you. Along the same thing on fee schedules, I know it's not a bullet point in here, but I'll mention it, is the SEC now wants you to explain your fee schedule in detail on whether or not it's a tiered system where each tranche or each level gets charged a different rate. And so they want you to like explain that and give an example to explain that. Or if it's like sort of all at one rate, you know, it's like all the assets are charged whatever rate you have based on the size of the account or accounts, you get one rate. So it's sort of this tiered or single rate schedule. And so you need to explain that to your clients so that they, you know, if you have a tiered schedule or blended, we call it tiered or blended. If you have a blended rate, you need to explain to clients that, hey, your first 100,000 is X, your next 500,000 is Y, and then your anything over a million Z or whatever. And then that's a blended rate. You know, the overall account's being charged X, but each of the subcomponents have a different rate. So.
Yep. Brian, that's a good distinction. So we have both of those available within our system, and we call them tiered, or if you're going with the blended rate, or the other option is drop through. So the entire balance would drop through to the lower rate. So what you can see on here is the billing group is the same thing as a household within our system. So you can see in here that you can add accounts to the billing group. So if a new account in a household is opened, then you can add that to this existing billing group. All of those accounts will automatically be combined for the purposes of calculating that lower tier. And then once the client reaches that breakpoint, that will be automatically applied. So as you can see down here in this fee structures snapshot, the balance of the account is at about 1.1 million. So once the account hit 1 million, then the remaining balance was billed at the lower percentage. So the system does all of that automatically for you.
Yeah, I think So I've been doing this a long time, and it always amazes to me the level of sophistication that the software has these days compared to 1994. I think it's amazing how efficient we are and how many errors I think have been reduced because of systems like this. So there's a lot of great features there. Um, so some of the other common issues that the SEC Risk Alert identified was I mentioned before, inconsistencies between the 2A and the actual practices. Um, oh, here's a really important thing. To the extent that anybody gets a markup, for instance, like let's say there's a fee that or an expense that they pass on to clients and they do a markup that needs to be disclosed. To the extent you're using, probably in this group, it's not going to be so much the case, but if you're using an affiliated broker dealer or a trust company and there was some type of markup from the clearing firm or the prime broker or whatever, you would need to disclose that. If you're getting any additional compensation on certain assets, like let's say you were getting on NTF funds, you were getting some type of revenue share on those, you would need to disclose that, the SEC said. The SEC strongly encourages investment advisors to audit their fee calculations. I would say on a quarterly basis, you should be auditing a sampling of all those, a sampling of your different types of clients' fee calculations and carefully documenting that. And to the extent that you find problems, you have to go deeper. Also, the SEC expects you to be proactively reimbursing clients when you find problems. And so it's really not acceptable to do, I mean, obviously when they find them, you're gonna go ahead and fix them. But they want you to have already done that. And they want to see that, like, hey, you discover the problem, you go ahead and correct it. They will not look kindly upon, so to speak, you being aware of the problem and then not fixing it. That's the kind of thing that makes me nervous, because that's the kind of thing that might show intent, and that might, push it from an examination to an enforcement action. And our whole goal in these exams is to get our examiner to give a positive, make positive comments to the enforcement team, saying, hey, because what happens after every normal routine exam is that towards the end of that, there's going to be a meeting between enforcement and examination. And examination is going to say, hey, I think that these guys got a lot of problems, or intentionally doing the wrong thing, or whatever the comments may be. Then that if those are adverse and it's a big enough issue, or if it's the right client, then the enforcement division will then start its own investigation. So when you start seeing business cards with enforcement on there, then you start hearing things like investigation going on, you're sort of in a difficult situation. And so your goal is to have a solid process to avoid your exam team making those types of comments about you. Okay, so here, I think this is a great little, the SEC did a sweep exam, and it was not just a sweep exam on fees, which they're doing, that Risk Alert, really laid out a lot of those issues. But this was on a firm that's using a third party to calculate fees. This is exactly what they're looking at. So basically here, they just want to make sure that the investment advisor has done initial and ongoing due diligence on the third party that's helping them calculate fees. And so I definitely am a big proponent of software systems like Bridge and having them help you do this, but you still have to do some checks. It's not going to be as extensive as if your own team was doing it, but you still have to do sort of like find out, what they have in place, what reports are available, to sort of help you with that process. It's like any service provider these days. If you're using a service provider, especially a service provider that has having direct communication with clients or is touching client assets, you really need to do some good due diligence and have documentation on that. And this is the kind of thing that the SEC specifically asked. Although I talk to SEC a lot, I'll tell you what, states are really hot on the fee issue. You can see here, this was a NASA report from a couple years ago. This really hasn't changed. Fees are the top issue right now. Lots of problems or deficiencies related to fees. In some ways, I think especially prior to Chairman Clayton taking over the SEC, I felt like the states were much more of the leader on fee issues than the SEC. And it was a very common occurrence for us to see fee issues, and we'd see like these sort of new positions, or what we call new stances at the state level. And then the states seem to be really leading the charge. And I still think they are, because they're out there, they're doing more audits as a general rule than the SEC is, even though the SEC is doing way more than it did 10 years ago. Still, the states are doing more audits, and they really do focus on these fee issues. So everything we're talking about, although the SEC has done a really great job, I think, laying out now, there are a lot of fee issues. Every one of those issues apply at the state level. And I would say many of those focuses actually, I think, more originated with state examiners than with the SEC. So don't think because you're a state firm that this, when I talk about the SEC or I'm talking about fee auditing, that this doesn't apply to you, because it for sure does. So one of the things I also threw in here was we put in some of our, so we have lots of investment advisor firms that we work with, and they're all getting, I should say all, but a large number are getting examined these days, either at the state level or the SEC level. And so these are some of the write-ups or deficiencies that we've seen. First of all, they look at your compliance manual to see if you have good fee audit procedures. To the extent, this is an interesting issue, to the extent that you're negotiating on fees, they want documentation about why you changed your fee schedule, what you looked at. So you want to make sure you have a full, robust ADV2A that has all the reasons why you may negotiate, all the grandfathered, like basically when you have to understand, when you're an investment advisor, it's not like being a car salesman. When you go into that car, that car lot, that the car salesman isn't really telling you all the facts. I mean, you can get a little bit from, you can find out what the wholesale price is, but there's some rebates that the car manufacturer is giving the dealer that you don't know about, and so you don't really truly know their bottom line. And that's because a car salesman is not a fiduciary. Maybe a long ways away from being a fiduciary, if anything. But when you go in and talk to your client about fees, well, when you start advertising to your client, even though they're not even your client yet, you're a fiduciary at that point. When you're out marketing yourself to the public, and then when you're negotiating that agreement, you have this duty to disclose. You have to tell them all the material facts, which includes like discounts and reasons things get negotiated. So that's why you put it into the 2A. And then the SEC wants you to, document why you negotiate or change the fees. They also sort of want consistency on discounts, which is really hard for a lot of people to, get their heads around. But we do see that it doesn't show up so much in the exams at the SEC, but we see conversations about that. And at the state level, we've seen like people that get written up about that, where they're inconsistent and they don't have it fully, they don't have the negotiating factors fully disclosed, and then they're inconsistent in the application of them. Appropriate fee breakpoints not applied. We saw fees being billed in advance but not refunded when the account terminates. That's like a long time issue I've seen for years. Firm did not have procedure for ensuring that dormant accounts holding only cash positions were not charged fees. That's a good one. So are you really doing any management when you have somebody sitting in cash for a year? And why are you charging an advisory fee? And of course, no audits on your fee calculations. That's very problematic under this SEC. So invoicing, I love talking about invoicing. There's really sort of the difference between SEC and state. And here, our team here at RA Compliance Consultants, back when several of the principals here were working at a very large corporate investment advisor, and went to the SEC back in 1996 or 97. And we asked the SEC to give us an exception instead of having to send out the invoice. We said if we just put it onto the statement or put certain things onto the statement, will you, waive the requirement to send out a separate invoice? And the SEC granted that in a no action letter. And then they sort of incorporated that in, and a few years later, they incorporated that into their rule. And so if you're at the SEC level, you don't necessarily have to have an invoice if you have the right information showing on your statement. Although I think it's still a good idea, and I would strongly recommend, if you have a way to easily have an invoice, to do an invoice. I think that it's valuable to clients, and it protects you, because I personally don't think what's showing on the statement is probably enough. But nonetheless, you don't have to do it. Now, the states, on the other hand, I would say probably half the states have followed the SEC's lead, and they don't require a separate invoice to be mailed to the clients. But the other half certainly have kept to their guns and said, hey, we want a separate invoice to be sent out to all the clients before or at the time you make the deduction. And so you have to go and look to see what your specific state's requirement is, to see whether or not you have to send an invoice. And then you want to make sure you look at what they were requiring on that. Some states have a little bit more than others on what they require to be in that invoice, and also when they expect it. Clearly before the money's withdrawn, or at the time the money's withdrawn from the client's account, if there's automatic fee deduction. And then the other thing is, I guess, how do you deliver that invoice? Well, first of all, at the SEC level, you can deliver things electronically if your client has authorized in writing that you can deliver things such as invoices and ADVs electronically. But you have to give them the permission to, at any time, to have it delivered via paper. And the other thing you have to sort of, in this day and age, I think originally, when people say, well, I want to deliver it electronically, how can I do that? We might tell people back before we had lots of cybersecurity concerns, you can put that, on, as an attachment to your email, and that, is really delivering electronically. Of course, these days with cybersecurity the way it is, and the threat of cyber criminals stealing this information and using it to try to create a fake distribution request, you're going to want to, of course, redact it if you're using it as an attachment, but probably the preferred approach by regulators and by cybersecurity experts would be to move them back to a portal that's password protected, and keep the invoice inside of there, which is probably the safest place for it to be. So, of course, if you have a client that's highly sophisticated, that you can send an encrypted email to them and they can unlock the encrypted email, that'd be fine too, from a cybersecurity standpoint. Margaret, can you tell us what you guys have available with your software on this front?
Absolutely. So when you run billing, all you have to do is check a box whether or not you want us to create invoices. And then when we run the billing calculations, invoices will be automatically created and they'll be automatically dropped into a secure portal. So you don't have to drag and drop invoices or do anything to get them into the portal. They're just put there automatically. So you can send out a notification to your clients with a link to your website that goes to our client portal. That's what a lot of our advisors do, just have a button on their website that says client portal, and then clients can log in securely using their own password to access this invoice. If you do need to email an invoice out, you can see on here we've redacted the account numbers so that those are not on there if you do want to send this or need to send this out via email.
The other thing, Margaret and I were talking yesterday, I think you have the ability to, is it put in like a fixed fee or a flat fee type of invoice if someone's doing that type of invoicing?
Yep. You mean instead of AUM-based fees?
Yep.
Yep, we can do that as well.
Yeah, I think that's a really valuable tool there's going to be certain types of, like I sort of mentioned it before, but like private equity or maybe types of engagements where you do all the work up front, and so an ongoing continuous fee doesn't make sense, or where you don't have a fair market value easily ascertainable. A flat fee is a great thing to have. Also, I think it's easier. I think all the advantages of using this kind of software just make it easier if you can put as many of your invoices into this type of system as possible. All right, so let's talk about some of the best practices. That's what I love. It's like how to keep everybody in good shape with their regulator, and how to avoid problems, or at least mitigate or minimize the number of problems you're going to have. So as I mentioned before, to the extent that you're going to use a third party, either a software or have like completely, so this like Bridge is sort of like a software that you will want to do some due diligence on. I mean, if you went all the way and had somebody else, do everything for you, you'd probably have to do more due diligence in some ways, I think, because you're delegating more of it and less involved. But regardless, if you're using a third party to calculate fees, you want to do an internal audit of the fee calculation, making sure that the fee calculator is correct, that the deductions are taking place. And that, for instance, could be, that could be partially somebody that's helping you calculate, but it might be the qualified custodian that's not, in following the instructions. So here, these are just a few different things that we would suggest that you look at. When you're doing your own, like for instance, when you're using Bridge, I think the important thing to remember is you need to start when you're doing your internal audit is we're going to talk about like a lot of different fields to compare or areas where there could be problems, but I always remind people, start from the beginning. Look at the client agreement, look at the Form ADV 2A. Don't forget those two things, because if there's like information that gets put into the system that's not consistent with the Form client agreement and the Form ADV Part 2A, then it can be very problematic. And even though the software is calculating it correctly, if you put garbage in, you get garbage out, so to speak. So if you don't put the correct data into Bridge's software, even though you checked a deduction or made sure that it included an asset, it could still be problematic because you didn't include the exclusions, you didn't get the rate right, you didn't put the schedule in correctly, you didn't include the right house, if there's householding, you didn't include that. So we tell you to look at, when you're doing your audit, look at the client agreement, the Form ADV 2A, look at the software, look at the instructions of the qualified custodian, make sure the qualified custodian actually deducted, check out the invoice, make sure it looks correctly. So those are all the things you're going to look at during your audit process. We tell people to use preferably if you're doing your internal audit, to have somebody that's not involved. So the person that loads and manages Bridge, for instance, I'd have that person do their regular job, and then have their supervisor look over and do checks and balances when they're doing their job. But when we come to this quarterly audit, I'd have somebody else who's not really involved in that initial setup or that regular maintenance do the audit. And I'd want somebody sophisticated enough so that they wouldn't have to rely on the staff that's setting up and running the software, so that they don't take their assumptions or their understandings. And so it's got to be somebody who has a critical eye with plenty of knowledge to do this internal audit that's not involved in the day-to-day with it. So here we got an example of I'll turn this over to Margaret. She can talk about this screenshot.
Yeah, so the top screenshot is just showing that the billing reports that are run in our system are saved in the system. So if you click in the links, the details link, for example, that will take you to the billing report, which you see below, and we'll summarize both by account and by billing group, even down to the fee structure level if you want to review that as well. But just go through how we calculated the fee step by step for that account. And then I'll show you more on the demo here shortly, but in the by group section, if you are using a tiered billing schedule or a drop through billing schedule, it is showing you how we calculate those breakpoints and then how we're applying that overall fee to the accounts within the household. So we do a lot to provide you with the resources as far as how we calculated that fee, should you need that for audit trail purposes, if you're going through a regulator exam, or if you have a client that just has a question as well.
So when you're doing the internal fee audit, here are the issues that I want, when you're looking at the ADB2A, the client agreement, and then the software, and then the actual billing, as it shows up on the statement, all that. These are the issues I'm most interested in, or where I think there's the greatest chance for problems. And that's billing in advance or arrears, billing frequency, the rate, breakpoints, accounts included, excluded, and likewise assets included or excluded, householding accounts, valuation date, source of valuation, non-traded assets valuation, any offsets or credits, so in ERISA accounts or trails. If you're getting any type, which probably won't have for people that are using Bridge, but to the extent you're getting a commission and it's you need to do an offset. That sort of, we all know that really well now, that the SEC wants, does not want double dipping. Automatic fee deduction or pay after invoice. Is sending an invoice required? Are you doing it? Deducting from another account, like sometimes you might pick one account and you're going to deduct all the accounts there, and you got to make sure that's okay. Like, is it an IRA account that's paying for everybody? That would be problematic. Has it been authorized? So quite a few issues there you can look at. Deducting from wrap fees, to the extent you got wrap fees, that's a big focus. We didn't talk about it, but if you have a wrap free program, making sure that there's not ticket or execution costs being charged by the qualified custodian. To the extent you are using broker dealers off the platform, you got to really do that. You probably should raise that as an issue. Hey, we're getting a lot of broker dealer charges on this wrap program because they're going off platform. They're not doing it at Pershing, they're doing it away from Pershing. It's really expensive to the client. And so you better make sure, you as a wrap sponsor better make sure that makes sense. So you, like, your person that's doing this audit needs to make sure there's no ticket charges, and if there's these off platform charges, that needs to be brought to someone's attention. Initial period, you need to prorate. Final period, prorate. Minimum and maximum fees that are in your ADB2A, you need to make sure you're meeting those. So I'm going to turn this, over to Margaret. She can give you the demo on the tool.
Perfect. Thanks, Brian.
Okay, I'll go ahead and stop sharing.
All right. Can you see my screen okay?
Yep.
Awesome. So as we saw in Brian's presentation, there were a few screenshots that were from the Bridge system, but wanted to show you the tool itself, take you through just what a billing run would look like in our system and some of the outputs that you'll get. So this is the dashboard where you'll log into our system. Today we'll just be focusing on the billing side of things, but as you can see, we also have a reporting module as well. So we have digital reports, PDF reports that have time-weighted performance tracking, asset allocation, appraisals, reports. So that is part of our system as well. So when you log into the dashboard, you'll see on here there's a few things at a high level that we're tracking for your firm. But what we'll focus on for today will be the billable assets section. So this is showing you if you are giving any discounts or not billing on assets, you'll see what percentage of your accounts have non-billable assets. And then you'll also see this billing status widget at the bottom. So this is going to alert you to accounts that don't have a fee structure. or that are not in a billing group. That way, you don't accidentally run billing without assigning a fee structure, exclude an account from that. So all of the data will come into our system automatically from the custodian once it's opened and funded. So again, today we have feeds with TD Ameritrade, Fidelity, Schwab, Pershing, and a few others as well. We're going to start at the most basic level. So the billing setup, you've got your fee structure section here. So you can see in here, we have a few different examples of fee structures that we can accommodate. You'll see the frequency, you can do monthly or quarterly. We have worked with some advisors that are transitioning from quarterly billing to monthly. So we can help you through that transition. We've got collection types. So you can see we have advance and advance with proration. Advance with proration is going to automatically calculate the number of days in the previous quarter or month that that account was open, and then add that to the bill for the upcoming quarter. So if we take today for an example, the account is open and funded today. So advance with proration would add about 14, 15 days from June to the upcoming bill for Q3. And then if we just click into this tiered rate for an example, you can see that we can also bill in arrears. You can do flat rates, so fixed percentages, flat account fees, or flat group fees. So this is a fixed dollar amount, just depends on whether you want to apply it at the account or group level. And then we've got the drop through or tiered. So again, that's when you have those breakpoints. Just depends if you're doing the tiered blended rate or if you're doing the drop through. So the entire balance drops through to the lower rate. Valuation method, you choose ending period balance or average daily balance. That way we don't run into any issues of accidentally doing one or the other, depending on what your agreement says. And then billing, we can do monthly or quarterly. So lots of flexibility on the fee structures themselves. And then each individual account gets assigned to its own fee structure. So this account, this is an example of an account that doesn't have a fee structure. So we can go in, if we want to assign it to a fee structure, we can do so there. Next level are the billing groups. There's a few use cases for billing groups. Billing groups are combining all of these accounts for the purposes of tiering or drop through. So any account within this household that has that tiered fee schedule assigned to it, those balances will be combined. We'll calculate the appropriate rate. I'll go through some examples of those calculations in just a bit. If you have a minimum, you can also set that here, and the household will be billed at the greater of calculated fee or the minimum assigned. All of these accounts will be consolidated onto a single invoice, and you can also see that we've relocated a fee to be paid from another account within the household. So in this savings account, we don't want to charge the child's savings account for the fee. Instead, we're going to relocate that fee to the parent's account. Brian, anything you want to note there on the billing groups and reassignments?
Nope, looks good.
Okay. Another area that I'll point out are billing splits. So this is an internal resource just for payroll tracking. So if you do any sort of internal revenue sharing on accounts, you can create different splits depending on how much goes to the advisor. And then if there's a portion that goes back to the firm or the rest goes to another advisor, we can set up and assign those splits accordingly. You'll get an internal payroll report at the end of the billing cycle that just helps expedite that internal processing at the end of a billing run. And then finally, those asset adjustments that Brian spoke about. This example, if you want to avoid accidentally billing on cash in dormant accounts, you can just set up a cash, firm-wide cash exclusion. Alternatively, if you have accounts that bring over a legacy position, you don't want to bill on that, I can go in and I can exclude just for this family or just for these two accounts. This ticker, if I wanted to type in another one, I could here as well.
That's really helpful from a compliance perspective. That's, I think, avoids problems.
Yep. So actually running the billing. At the end of the month or quarter, you'll come in and you'll select the end of the quarter or the month that you're running it for. And then like I mentioned earlier, you just leave that box checked if you want invoices. They'll be automatically run, automatically dropped into the client portal if you're using that. And the client portal isn't an all or nothing thing. You can invite some of your clients to the portal. And then again, if you have some clients that you need to mail or email that invoice out, you do have the ability to download those invoices as well. So you'll click Run Billing Report. And then the billing report will take a couple of minutes to run, and you'll get 3 different outputs. So the billing report, the invoices, and then the fee upload file for your custodian. The billing report is the audit trail. So again, this will save in the system. If you do want to download this report by account, you can go in, export this file to Excel, and save it on your desktop if you want to do that as an extra precaution, but it is saved in our system. So the summary tab is going to show you total fees that we've calculated. If we are doing a split payout, it's going to tell you how much is being paid to your advisors, how much is coming back to the firm. And then we're also going to highlight any accounts that have low cash or insufficient cash to cover the fee that we calculated. And then you can review again, either by account or by group. If you want to toggle these columns to show or hide different columns, you have the flexibility to do that within the dashboard, or again, you can export to Excel. And then if we go into the by group tab, if we want to just click in and see how a fee was calculated, we've got all of the calculation details in here. We've got the group billable balance. This one is all just assigned to a 1% fee structure, but you have all of these details here as far as account size weighting. So if it was a tiered fee structure, the fee would be weighted based on the account size, or applied based on the account size. And then we have that splitter payout. So again, this is if you have multiple advisors, you are sharing revenue. This is going to tell you the appropriate payout amount for that quarter for each advisor. And if we go back to the account tab, it's actually going to have the splitter names in there as well. Invoices, again, they're automatically dropped into the client portal. You have the option to download. This download button will just download a zip file of all of your invoices, so you'll get an individual PDF for each household. And then I can either download that PDF on my dashboard, or I can just view an online invoice. All of the invoices would be white labeled with your firm's logo. And provided that everything is coming from the custodial account, everything will have "this is not a bill" language, amount due is 0. So just an informational invoice for the client. You've got a summary here at the top, and then a breakdown by account of how we calculated those fees. And then you can see in here as well, the fee relocation is also noted. So the fee is calculated for this account, but the debit balance is 0 since we are relocating that. Detail on the fee structure, and then some agreement language down at the bottom. So the client would have the option to print that invoice at home if they wanted to, if they were using the portal. And then last, this download button will give you a pre-formatted file for your custodian. So it has account numbers, and then the amount to be billed, any other specifications depending on the custodian. We are rolling out a new UI. So I do have 2 tabs open right now. It's the same data, just a bit of an updated view. So this is a bit of what's coming. So you'll see here your billing report will be loaded onto this screen. Just a bit of a different layout and view. You've got the insufficient cash, and then breakdown by account. And then to view the calculation details by the group, you can go into here as well. So same data that we looked at before, just a bit of an update and some more colors. So with that, that wraps up the demo portion. Want to move along to the Q&A session. I know we're running short on time. So we've gotten a couple questions so far, so I will get started on those. The first question is, can the system account for a breakpoint and assets at different fee levels? This example is if you charge a lower fee for a certain asset class like individual bonds versus 1% for the rest of the portfolio. So right now our system only allows different fees to be assigned to different accounts within a household, but you cannot assign a different percentage or fee structure to assets within a household. You can either just exclude the asset fully from the billing or include it. So if those bonds were held in a separate account, we would be able to bill that separate account with the bonds at the lower percentage, but unfortunately not assets within the same household or within the same account. It looks like we have another question about Folio Institutional and whether we have a feed with them. We do not have a feed with Folio Institutional at this time. Right now it's TD Ameritrade, Fidelity, Schwab, Pershing, SSG, Interactive Brokers. Those are the main ones that we work with. Any other questions?
Well, my only comment would be I'd encourage everybody to look at these types of technology solutions. I think they make investment advisors much more efficient. Give you some of the tools to be able to do the quality checks and the compliance checks you need. And so I think it's. I think this provides a good base to build a really sound fee and expense process to make sure that your firm's doing what it needs to do from the SEC or the state security regulators perspective.
Awesome. Thanks, Brian. Well, I think with that, we'll wrap up today's demo portion. We'll be sending out an email that has this slide deck that Brian went through, as well as a billing checklist that we collaborated on. So if you have any follow-up questions for either myself or Brian, feel free to respond to that email and we can certainly help with those. But want to thank Brian for really leading this webinar today and sharing a lot of his expertise and knowledge with us. It's really beneficial, I think, for us to have a refresher on some of these key billing items now and again. So we really appreciate your time and again, your expertise today, Brian.
Thanks a lot.
All right. Well, thanks so much for everyone hopping on. We really appreciate your time and hope you all have a great rest of your day. Thanks, Brian.